Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 16th of April 2020, and yesterday we published a video entitled Retail Sales and Industrial Production Down, Jeff Bezos' Fortune Up, where we highlighted extremely poor economic data coming out of the United States. But despite the fears of a global recession, if not depression, Jeff Bezos' Amazon company is reaping the rewards of enormously increased sales. And on Tuesday, our video $1,800 Gold, Is It Coming Soon?, where we express the views of authors on both Reuters and Bloomberg, both implying that most certainly higher prices are on the cards, and frankly $1,800 from what was then the current $1,720 is not that far a stretch. And on Sunday, we published the video entitled Buffett Sells Shares. Is this a sign of worse things to come? Where we ask the question, have stocks and equities further to rise, or is Warren Buffett telling us something via his recent share sales, that equity markets may indeed have further to fall? Okay, today we were expecting some very important economic data, which has actually now been announced. But first we thought we would look at today's key figures that we tend to do in our normal update. So the time of producing this podcast is 19:30 p.m. GMT +1, and the figures are as follows. The Dow Jones is down just 78 points, while the S&P 500 is up 5, and the Nasdaq is up 82. The markets as yet are not closed. European markets did close marginally up today, while Asian markets generally were down. The dollar index has hit that 100 mark, while oil prices have fallen yet again, albeit marginally. Gold prices are down slightly by $6 an ounce, and it currently stands at $1,714. And silver prices are down just 7 cents at $15.43. producing a gold to silver ratio of 111 to 1. Now, in yesterday's video, we pointed out the retail sales and industrial production figures were dreadful. And today, the weekly jobless figures announced a few hours ago show additional unemployment claims of 5.25 million. And this is after last week's 6.6 million. This means that more than 20 million unemployment claims have been filed in the last month across the United States, while economists now forecast that the US economy is sinking into its worst recession in decades. The unemployment figures appear now to be just over 22 million, completely eradicating all of the jobs gained since the Great Recession. Now, these jobless figures are supported by economists who are now viewing that America's unemployment rate could have risen to 15%, with further layoffs likely in the coming weeks. Some economists in extremis are saying that eventually this rate could rise as high as 20%. It'll be interesting to see if that happens, and we hope for the people of the United States that it does not. Housing starts and building permits for March are also down compared with February, adding to economic woes. And the Philly Fed Manufacturing Index for April is minus 56.6, compared with minus 12.7 in March. One need not look very far to see what the IMF, the World Bank, and the other major central banks are predicting concerning global recession. Now, of course, the interesting aspect today is why have we seen gold prices fall slightly rather than rise considerably, particularly after, once again, dreadful weekly jobless figures? Well, the first thing we have to bear in mind is that the main factor supporting gold currently is the tremendous amount of stimulus from central banks and the extraordinary amount of fiscal stimulus from governments, thereby psychologically affecting investors who will always look forward to the months ahead and are wondering what this will actually do to their respective currencies, and also how these monies are eventually to be paid back, but not least of which being the undermining of those currencies and currency values. Now, as economic figures deteriorate, these stimuli will increase even further, and there are already signs that staple items in shops have begun to rise in price by as much as 4% in the last month. So again, potentially, perhaps not for now, but moving forward, inflation might be a concern. We can expect to see a slight pullback for gold, certainly from a technical point of view, as the market consolidates. And of course, the United States dollar strengthening will keep it capped for a short while. There does appear to be considerable support at the $1,700 level, with additional support at $1,680. So, frankly, if prices should fall back between these two figures, one should not grow alarmed. Silver is staying below the 50-day EMA level at 1560, and like gold, the dollar strength will short-term curb its rise. You see, much of the bad news that's been announced, particularly today, was expected, especially really after yesterday's figures. Now, we shall have to wait and see how markets analyse and digest this news tomorrow. And on Saturday, our weekly update should hopefully be in a position to give a more substantive forecast. So, with silver markets oscillating around the 50-day EMA, and gold really being a little exhausted from recent gains, there is likely to be some further consolidation, at least for a short time. Now, interestingly for our listeners, and we thought we would share this with you, we were asked by the son of a friend of ours who is interested in putting away £100 to £150 per month into precious metals, either gold or silver. And we suggested to him, at least for the moment, that if he wants to start that saving, then to use a company similar to Bullion Vault. We recommended Bullion Vault, but there are many others out there, as the physical premiums are too high. And we suggested he should place it for now in silver, even though, short term, we are more bullish gold. And we thought we would share that sort of psychology really with you as to why we did that. You see, compared with gold, silver is undoubtedly historically cheap. And with a regular monthly payment, even if this relative cheapness lasts for quite a few months, he can take advantage of dollar cost or pound cost averaging, meaning that while prices are low, you get more metal for your money, and then when prices rise, you get a little less. Now, with his time scale also being for 5 years or potentially longer if necessary, we pointed out that whilst we predicted a ratio above 100 to 1, we certainly also forecast that this will not hold indefinitely. And as world economies gradually grind out of recession, we will see these ratios self-correct. And therefore, from a percentage-wise rise potential, silver is more likely to prove the beneficiary over gold. There is also, however, that said, strong information coming our way which, if true, suggests that the dollar index is quite likely to have another spurt upwards, and pretty soon. And this may appear quite surprising to many, bearing in mind the levels of financial stimulus which under normal circumstances would actually weigh heavily on dollar values. But we have to bear in mind that the dollar, despite the level of public spending and tax breaks and contingency plans, despite all of this, the dollar is still seen as the global safe haven currency, particularly when you consider the parlous state that most other Western economies are in. Now, we're attempting to authenticate this information, and there are, to be frank, many conflicting equations to attempt to calculate, really. And even we are struggling, but we suspect that a dollar index heading for 105 may not actually be that far away. And if we are correct, and that is the case, then that will again act as a headwind for gold and silver prices. But listeners to our channel will be very much aware that we have predicted this decade to be the decade for precious metals. Not necessarily jumping $100, $500, $1,000, $2,000, $3,000 all in one go, but a gradual, consensual perhaps, rise in their price almost regardless of what happens to equity markets. Even if they rise, which the financial stimulus should encourage, there is no question that gold can rise at the same time. But more of that in a future video. So thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting, we update our Richard and Greg channel every couple of days, and we produced or published a video yesterday on that channel. And again, please, if you haven't done so, subscribe to that one too. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.